Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Modest gains for Asian stocks while the dollar steadies as traders await U.S. inflation data for Fed policy clues. Israel and Hamas reportedly agreed to a ceasefire deal in principle. CBS says a deal could be finalized as early as this week. And South Korean investigators arrest impeached President Yoon for questioning over the martial law fiasco. Well, it's just gone 8 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Lots of geopolitical news coming out this morning. We're going to talk more about the potential for that ceasefire deal between Israel and Hamas. But it's also a really big day for markets as well. Attention is going to be squarely focused on the U.S. inflation prints coming out later today. Will we get an upside surprise? And if it does happen, which is what the markets are expecting, another hot number in terms of the year-on-year rate, then you could see more fuel added to the fire with this bond sell-off. So something to bear in mind. It's going to be a big data print. But it's not just inflation. We also get U.S. bank earnings. Many banks on slate today. We've got JP Morgan, Citi, Wells Fargo, BlackRock. All of them are reporting later today. So we will be dissecting that in the show. As for markets, the S&P futures not doing a whole lot. We had a bit of a muted close yesterday, slightly leaning towards the positive. Asia Pacific, the handovers, you can see pretty flat as well. Not a lot going on there. 10-year yields hovering around 4.8%. And then Brent sitting just below $80. We saw the energy complex dip once yesterday it became apparent that this ceasefire deal might be agreed to by the end of the week. Even though, as we've been talking about the last few months, there isn't a lot of geopolitical premium priced in to oil. But the main event is still going to be inflation. Let me just show you what the expectations are for today's print. This is our terminal chart today, taking a look at what the estimates are. U.S. inflation is estimated to tick higher once again for the December print. The headline CPI month-on-month figure is expected to come in at 0.3%, unchanged from November, but the year-on-year rate is expected to rise to 2.9% from 2.7%, and that is what you're seeing on the screen right now. So that is the expectations for today's print. Back to geopolitical news. Israel and Hamas have reportedly agreed in principle to a ceasefire deal. That is according to CBS. The network says a deal could be finalized as early as this week. The proposed ceasefire would involve a 42-day truce, the release of hostages, and the establishment of a buffer zone in the Gaza Strip. Join me now is Paul Wallace, who leads our MENA economy and government coverage. Paul, good to have you with us. So it really does feel like we are on the verge of getting a ceasefire deal agreed to. In terms of the details of the agreement, we understand that it's going to be a phased deal, similar to what was discussed back in the summer. But what details do we know at this point?
So we are very much on the verge of a deal. In fact, there were high expectations that there'd be an announcement last night. That didn't come. We don't think there's any major sticking point at this stage. We do have to caution that the thing could still collapse, and all sides are saying that, from the US to Israel to Hamas to Qatar. But broadly, they've agreed on a 42-day ceasefire. It's going to see the release of 33 hostages held in Gaza in that time, and an as yet undisclosed number of Palestinian prisoners from Israeli jails. Some of those 33 hostages are almost certainly going to be people who have been killed in captivity. The US and pretty much all sides want to ensure this turns into a permanent cessation of hostilities. Israel is still saying it must reserve the right to resume fighting against Hamas. Its long goal has obviously been to destroy the organization, but the US has been working on wording that obviously satisfies Hamas and Israel, that essentially makes it quite difficult for fighting to resume after this has started. Another key element is that aid, as the US says, will surge into Gaza as soon as the ceasefire starts. Yeah, much needed humanitarian aid, and of course the establishment of that buffer zone as well, which seems to be agreed to in the draft proposal that's been put forward. Let's talk about the bipartisan push that it has that we've seen over the past week to get this deal across the line, because the Biden administration has tried over the course of the summer unsuccessfully to get
both sides to agree to a ceasefire deal. And it seems like it took a bit of a push from the Trump administration. We had the Trump Middle East envoy, Steve Witkoff, in the region, engaging with the negotiators, speaking to the Israeli prime minister. What does that tell us about the longevity of the deal, given that it feels as though it's got both sides supporting it, both the left and the right in the U.S.?
It really does, and I think that's been one of the interesting aspects about this latest push to get a ceasefire. It's been Trump and Biden's teams working together, and they've made very clear that they want a ceasefire in place before Trump takes office on Monday, on January 20th. So this is why this week is so crucial. It doesn't mean that everything collapses if we don't have a deal by Monday, but very much Trump and Biden want it done by then. I think that combined pressure on both Hamas and Israel has got the two sides to the point where we are now, closer than ever. From Israel's point of view, I think Trump has made it very clear to Netanyahu and other members of the Israeli government that he does not want a war on his plate in Gaza when he starts. And I think that has really concentrated Israel's minds, more so than, let's say, if Biden had won the administration and was about to start, had won the election and was about to start a second term. Netanyahu does not want there to be sort of any gap between him and Trump going into the start of Trump's second term.
Yeah, very interesting. And you've got to wonder whether incoming President Trump will take the credit for getting this deal across the line. Paul, thank you very much. Paul Paulus, leading our MENA economy and government coverage. Thank you. All right, let's broaden the conversation and bring in Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Good to have you with us, Dalia. I'm sure you heard my conversation now with my colleague, Paul. Let me just ask you whether you believe that this potential ceasefire deal could lead to a full cessation of hostilities.
It could, and I think for a couple of reasons. Let's look at the scenario from both the perspective of Hamas and the Netanyahu government. Now, this is critical because this moment of Trump taking office next week, if Trump were to continue the Abraham Accords that came under his authority government last time, if you remember, that was an agreement between the Gulf countries, Israel, the United States, and later Morocco and Sudan. Absent in all of those negotiations were the Palestinians. So it could be, and I speculate, that Hamas wants a ceasefire deal so that they solidify their place at the table in future negotiations with the Trump administration. And so this could be why they're actually willing to sign right now. The holdup is coming from Israel. And so for Netanyahu, if we look at this from his perspective, for example, his own government has been one of the obstacles because the leaders of the two largest far-right parties in his government refused to sign any deals with Hamas. Today, the Jerusalem Post reported that Ben-Gvir, the Minister of National Security of Israel, is threatening to resign if a deal is signed. So this could be why there is indeed a delay. And he's admitted to preventing previous deals from being signed. So it could be that Netanyahu is negotiating within his own government that let's move forward. Let's see how the 40 days go. Within the 42 days, all hostages should be released. And then if it doesn't work, they can resume the war on Gaza. And so right now, what we could be seeing is that Hamas is hedging its bets, trying to get a place at the table with the Trump administration, and that the Netanyahu government is negotiating with itself.
Dalia, it's really interesting that you mentioned that because the Hamas, and even if you look at the comments that Anthony Blinken put out yesterday, don't have legitimacy in the eyes of the U.S. And all the talk has been about what Gaza governance is going to look like in the future. And there is an understanding that it will not be governed by Hamas. The idea and the proposal is for a reformed Palestinian Authority to take over governance. So let me just ask you why you think Hamas, in their own eyes, think that they have some legitimacy in the international world's view.
So it's interesting. On October 5th, just 2 days before October 7th, a poll that was conducted of Palestinians in Gaza, 76% of Palestinians did not see that Hamas was any longer their legitimate government. They actually wanted them out of office. And so Hamas has been struggling with both internal legitimacy and, of course, external legitimacy, with most countries of the world recognizing as a terrorist organization. And so what it could be that it's right now trying to actually get a piece of the pie, a seat at the table. But what we do know is that Israel has declared that the future of Gaza should be under the authority of Israel, and perhaps with the Palestinian Authority in some regard having some oversight, not just in the West Bank, but in Gaza, but with Israel actually being administering governance. And so, again, what we could be seeing is Hamas trying to hedge a piece of the pie here. Only the future will tell, but I think this is why they're trying to strike a deal before the Trump administration comes into power.
I just wonder how relevant a player they are going to be in the future, especially as well with the broader backdrop of the weakening of all of Iran's proxies and allies around the region. And here it's not just Hamas, of course, but you look at the developments in Lebanon, the decapitation essentially of a lot of Hezbollah's military capabilities, the fall of the Assad regime. How does the bigger regional context fit in to the conversations that are taking place right now around the future of Gaza?
You're absolutely right, Jemana. The region itself actually plays into what's happening in Gaza now and in the conversation. We just saw the end of a 50-year Assad regime with both Russia and Iran weakened and unable to defend it, Israel at war with not just in Gaza, but also with a fragile ceasefire in Lebanon, striking parts of Syria and Yemen with the support of the United States. And while Egypt and Qatar are trying to negotiate this ceasefire deal with the United States over Gaza, it wasn't too long ago that Qatar negotiated a ceasefire deal with the United States over Afghanistan under the Trump administration. And again, in the region, Pakistan increasingly becoming more and more of a fragile state. So the world is very different than the one Trump had before. And if we look at some of his appointees, we might actually be getting a more hawkish administration, less willing to negotiate with nuance. And so you are right. The leverage that parties like Hamas, Hezbollah, and other kind of fringe groups have had is actually diminishing in the region. And while that is a positive thing, it is how do you bank on this for the future? And I think Syria is an interesting test case for this.
Yeah. Well, we'll pick up the conversation in the future. Dalia, great to have you with us on the show today. Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Thank you. Now for a look at some of the other stories we're following today. Donald Trump says he will create an external revenue service tasked with collecting tariffs on foreign imports. In a post on Truth Social, the U.S. president-elect says he'll set up the agency as soon as he takes office next week. Analysts and Democrats have pointed out that tariffs are already collected by U.S. Customs and Border Protection. And coming up, hear why Cordoba advisory partners thinks many of Trump's tariff threats are really negotiating tactics. More on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, traders are awaiting today's U.S. CPI report with a firm figure expected to bolster the case for the Fed to hold rates steady. Goldman Sachs' chief U.S. strategist expects a further inflation slowdown this year, which he says will help bring down bond yields. David Costin spoke to us at the bank's Global Macro Conference in Hong Kong.
The idea of a higher bond yield environment would be a headwind for really strong returns. Our expectation is that inflation is coming down slowly, and that bond yields will fall over the rest of this year, something closer to 4.25% on nominal yields, down from the current level, which is much higher than that. So I'd say that's a big area of focus for fund managers. One of the questions we spent a lot of time with yesterday on the first day of the conference.
All right, let's bring in Rami Sarafa, CEO of Cordoba Advisory Partners. Rami, good to see you on the show today. Maybe let's just start with the imminent data, and that is the US CPI print. A lot of focus on this print simply because the market doesn't really know what to make of the Fed here, and most of the language recently suggests that they are less inclined to go for an aggressive easing cycle and possibly, maybe even go for one, even no cuts throughout the course of 2025. What does a sticky inflation backdrop mean for overall investor sentiment?
Yeah, that's a great question, Jumana. I think, that's going to result in longer rates staying elevated. One of the themes we actually really like for this year is buying long rates in general. We think that maybe the bond market has gotten a little ahead of itself in terms of how much it's gone up in a short period of time. But we think ultimately the inflation print will moderate and it will be supportive for markets.
Yeah.
We're seeing, disinflation in other major economies in Europe, in China, and Japan, even some emerging markets. It's a global, economy, which means that eventually the U.S. will import disinflation, assuming that Trump's tariffs and policies do not result in any supply chain disruptions, et cetera.
Yeah. So, of course, the caveat with tariffs, because we just don't know what the policy is going to look like once it's implemented. I want to take you back to, I think it was around, was it November, December, when we were talking about the appointment of Scott Bessent to Treasury Secretary position and his 3-3-3 mantra, his target of 3% deficit. And the market was reassured by that because they felt that somebody was coming in who had an idea of how to manage the books. But since then, it feels as though the language has changed, and President-elect Trump has been very much focused on these tax cuts and perhaps less focused about bringing in the deficit. Does that not have an adverse impact on long-end yields? You talk about wanting to buy yields here. Are you not concerned about the fiscal situation of the U.S., essentially?
Listen, it's all about perception, right? It becomes a self-fulfilling prophecy. If people think that Trump's policies will cause asset reflation, they will, right? So what we're seeing today is sort of like a pair trade. So we see Trump saying that I'm going to stimulate the economy through lower tax cuts, lower regulation, but then you also see that he says that I'm going to use tariffs as well as the potential for deportation of immigrants and whatnot, which is inherently inflationary, right? That causes supply chain disruptions, that can cause price increases for consumers. So there's this balance that they're trying to strike. That's why it seems sometimes contradictory, so to say, between him and his administration.
Yeah. Let's talk about the USD. The dollar has been strengthening into and out of the U.S. elections. And we've got earnings season. It kicks off today. A lot of the banks are reporting. But I just wonder whether this dollar strength is actually going to pose a headwind to many of the U.S. growth stocks out there that derive revenue from abroad.
Yes and no. I mean, you have to remember two things. The market's really being propelled by big mega tech companies, which in general have low cost of capital. They don't borrow a lot. They're very, cash accretive. So that will continue to propel higher, in our opinion. We also see some sectors benefiting from a strong U.S. dollar. For instance, here in the GCC, you have consumers that have higher purchasing power than ever. You have sovereign wealth funds more interested in U.S. dollar-denominated deals than ever. So there are some advantages to a strong U.S. dollar. However, it can't get to the point where it starts breaking other economies, especially in emerging and frontier markets, which are very susceptible to, rates on U.S. dollar-denominated debt.
Yeah. Question about breadth of the market. Again, it was very narrow last year, and leadership was contained to just a handful of stocks, as Magnificent Seven, NVIDIA leading the charge. Do you think that breadth changes and broadens this year? Is there going to be an opportunity beyond just that handful of mega cap stocks?
Assuming rates do not spike more than where we see them today, which is our base case and our assumption, we do expect sectoral broadening within the market. So you have to look at the sectors also that would directly benefit from the deregulation that Trump and his DOGE department have promised, right? So things like energy, financials, right? We're actually more bullish on financials, fintech, specifically, credit card companies, for instance. Like when you have a strong job market and you have elevated rates, those are great companies to own. We also see that he wants to deregulate finance further. He's surrounding himself with a lot of private equity and banker insiders, and that inherently, should lead to, good earnings for financials in general.
Yeah, and even in the run-up to that today, we've got the U.S. banks reporting. Looks like they're going to be really strong on the investment banking side of things. Rami, thank you so much for coming in today.
Thank you for having me.
Good to have you with us. Rami Sarafa, CEO of Cordoba Advisory Partners. Now for a look at some of the other stories we're following today. Meta is to cut roughly 5% of its staff through performance-based terminations, affecting about 3,600 people worldwide. In an internal note seen by Bloomberg, CEO Mark Zuckerberg says he has decided to raise the bar on performance management. The Instagram owner plans to hire new people to fill their roles later this year. Boeing delivered the lowest number of jets last year since the pandemic. The U.S. plane maker handed over 348 jets, less than half the tally of its European rival Airbus, and about one-third fewer than the previous year. Boeing has been working to restore confidence after a turbulent year that included a 2-month strike and production curbs following a mid-air door blowout. Coming up, it's set to be 10 times the size of the world's biggest existing solar battery project. More details on the Emirates' green energy plans in the desert. That's next, and this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Now for a look at some of the other stories we're following. The UAE is planning a $6 billion mega solar and battery project to provide uninterrupted power supply as it targets a rapid boost in clean energy. Abu Dhabi's state-controlled Masdar will build 5.2 gigawatts of new solar capacity linked to battery storage. The project will stretch over an area of 90 square kilometers in the Abu Dhabi desert. Masdar is targeting 19 gigawatt hours of battery capacity. That is more than 10 times the storage at the world's biggest existing solar battery project. And the Abu Dhabi Investment Authority is buying a minority stake in a Canadian platform that makes it easier to allocate capital to multiple hedge funds. A subsidiary of the $1 trillion sovereign wealth fund will raise its exposure in InnoCap investment management to 10% in the coming years, with an ADIA director joining the board. And checking the yen now, after the Bank of Japan's Ueda spoke moments ago, saying the bank will raise rates if improvement continues in the economy and prices. That decision obviously is due next week, and you can see the uptick or the downtick in dollar yen is on the back of Ueda's comments, and hopes really growing that they will actually tighten rates or hike next week. All right, coming up, Israel's oldest venture capital is announcing a new strategy focusing on early growth investments. We hear more from Lisya, Bahar, Manoah next. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Modest gains for Asian stocks while the dollar steadies and traders await U.S. inflation data for Fed policy clues. Israel and Hamas reportedly agreed to a ceasefire deal in principle. CBS says a deal could be finalized as early as this week. And South Korean investigators arrest impeached President Yoon for questioning over the martial law fiasco. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, big day for markets. We've got U.S. inflation to look forward to. The market is anticipating another uptick in that year-on-year rate from the prior month. So again, a hot beat or hotter than expected number could add fuel to the fire of that bond sell-off that we've been witnessing. But today, not seeing a whole lot of action on these market boards. S&P futures trading sideways, slightly better end for Wall Street yesterday. Asia Pacific, the handover leaning towards the green, but only marginally so. 10-year yield sitting at around 4.8%, just below that. And then Brent is seeing a bit of an uptick this morning, but still sitting at around $80. We did come down a tad yesterday on news that the ceasefire deal between Israel and Hamas could be agreed to by the end of this week. So some of that was a reflection of geopolitical risk. But switching over, something I wanted to draw your attention to, obviously the inflation print, the single data print today is going to be in focus, but more long term, 10-year break-evens. So break-evens are essentially the market's expectations of where they expect inflation to average over the course of the next 5 years, 10 years. So in this case, we're looking at the 10-year rate. It's back at 2.46. Why do I want to show this? Because I wanted to highlight that inflation expectations have been creeping higher. So it's not just these spot inflation numbers that have been surprising to the upside, but also people's expectations of where inflation is going to end up. And so that is certainly something that the Fed have to be looking at when they think about monetary policy. So something to think about there as well. But moving back to the region, Israel's oldest venture capital firm has announced a new strategy that focuses on early growth investments while expanding its portfolio into deep tech and defense tech. Elron Ventures has also appointed Yaniv Schneider as CEO. He previously founded and led the R&D center of Israel's government-owned defense giant Rafael. Elron and Rafael have a long-running partnership focusing on commercializing Israeli defense technologies to civilian markets. So joining us now is Lisya Manoah, a chairperson of Elron Ventures and managing partner at Arieli Group. Look, there's a lot to talk about, but first, before we talk about the business and the outlook for the company, I do just want to ask you about the main news of the day, of the week, and that it looks as though there could be a ceasefire deal agreed to between Israel and Hamas. Let me just ask you, from a sentiment perspective, how has the war been affecting investor sentiment into Israeli businesses?
Good morning, Joanna. First of all, thank you for hosting me. It's a pleasure being here with you. Indeed, it was a very challenging year on the ground in Israel for all of us, specifically for the businesses. But despite all these challenges, so Israeli high-tech companies shows a remarkable resilience. And this is evident in the numbers. Israeli startups have raised over $10 billion this year only. And when we are looking at the numbers, M&A have showed a record number. So I am really that proud of all the high-tech companies that worked around the hour and showed the resilience and worked for the meeting that the customer demands, showing that innovation and looking that for the growth. And that was that proven on the numbers.
Yeah. Let's talk about the change in strategy of your own fund. Why have you decided to make the move away from early stage investing to growth investing? Why did you see the opportunity there?
Let me take maybe a step back and give you that some context on the new strategy that Elron has announced this week. In September 2024, Arieli Group has acquired the controlling shareholder of Elron, and which is traded in Tel Aviv Stock Exchange. Elron is the first evergreen fund in Israel focused on the Israeli high-tech, and way before anyone was talking about Israel as a startup nation. So for over 60 years, Elron is investing in the cutting tech technologies emerging from Israel. So when we are looking on the last decade, Elron had 17 exits with totaling $2.6 billion. And exactly what we are doing, the new investment strategy and policies putting here, that shows that Elron is positioned for the future growth. So we have three major steps that we are taking towards to this goal. The first new investment strategy has the three pillars. The first pillar, investing in early growth, which is that leading shorter time to exits. Second, investing in deep tech and defense tech alongside with the cybersecurity and SaaS. And the third, investing internationally outside and inside of Israel.
Yeah. You mentioned being closer to the point of exit. So that's interesting, investing in the growth stage of a company's cycle. First of all, let me just ask you how you see the outlook for exits in the coming years, because it's been a pretty dry landscape out there.
Correct. It is generally dry landscape during the last 3 years that for the venture capital ecosystem. So this is the number one. But when we are looking at around the Israeli numbers and the global high-tech numbers, the average time to exit is longer than the fund period. So we are talking that around 11 years. So the last reports are showing. So we would like that to focus that on the companies that have shown that the product market fit And we as a group are ready to take them to the internationally, to the customers, help supporting them on the growth and making that the route that towards that to the exit, which is M&A and also IPO.
What about the cost of capital? We were talking about higher interest rate environment probably staying with us for a little bit longer. What is that doing to fundraising efforts?
So it's a great question. So when we are talking about the fundraising, so the Israeli startups has that fundraised over $10 billion now. But mainly when the fundraising was focused on several verticals, which is that cybersecurity, fintech, and also that defense tech, which is a deep tech. So we need to make sure that the technologies, verticals are proving that the numbers towards that to the customers and are going that towards that to the growth and towards that to the exit. So even the interest rate will remain with us, which is that making the difficulty for the fundraising effort. So we need to be better than this in order that to prove that the technology, it is not nice to have, it is must to have. So when we are looking, for example, the dual technologies and the defense tech technologies, it is not a hype, it is rather a response towards that to the global need.
Yeah. Lisya, going to leave it there. Thank you so much for joining our show today. Really fascinating discussion. Lisya Bahar Manoah, Chairperson of Elron Ventures and Managing Partner at Arieli Group. Thank you. Well, Yoon Suk-yeol has become the first sitting South Korean president to be arrested after investigators launched a dramatic pre-dawn raid on his residence. In a taped address, the impeached president says he's agreed to be questioned over his short-lived martial law declaration to avoid bloodshed.
Today, when I saw them break into the security zone with firefighting equipment, I have decided to accept appearance at the Corruption Investigation Office for high-ranking officials in order to prevent an unsavory bloodshed, although it is an illegal investigation. However, I do not approve of this investigation by the CIO.
All right, pretty sharp commentary there from the president. Bloomberg News Seoul bureau editor Danny Thomas joins us now. Danny, good to have you with us. Just walk us through the state of play. What exactly is happening to Yoon right now?
That's right. So thank you for having me. This is a watershed moment for South Korean politics. And as you said, Yoon becomes the first incumbent president to be taken into custody. This was the second attempt, and this time the investigators were better prepared. What's happening right now is the investigators have taken Yoon into their office, and they have 48 hours to question him. And if they need any more time than that, they will have to seek an additional court warrant to keep him longer for questioning. So that's what is happening. We don't know the details of what will come out. We are hoping that the agency will come out and speak at some point. There has been so much of interest around the world on this story, and given today's arrest, there is a possibility that we might hear some more about on Yoon's whereabouts later today.
So. Just walk us through what happens next. I mean, just in terms of, one, how long he's likely to be in custody, and two, what happens to governance in the country right now? Because he's the first sitting president to actually be arrested.
That's correct. So the country is now is headed by the acting president, who is also the finance minister. So Yoon, all his official powers have been suspended, so he's not really ruling the country anymore. The acting president takes the decisions. What happens is there is a parallel constitutional court that is hearing his case, and if that court decides that Yoon needs to be permanently removed from office, they have up until mid of June to make the decision. And once that is confirmed, there will be an election within 60 days. So that's the timeline we're looking at. In the meantime, this probe that is going to continue will have a separate kind of track.
Well, major news out of South Korea. Thank you for keeping us abreast of what's going on there. We'll certainly keep an eye on developments. Bloomberg News Seoul bureau editor Danny Thomas. Coming up, Barrick suspends operations at one of the world's biggest gold mines as a dispute with Mali's government escalates. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Barrick is suspending mining operations in Mali due to a dispute with the government over revenue distribution. The company warned it would be forced to take such action if the authorities continue to restrict exports and disrupt operations. Barrick stock has fallen more than 20% since October when the disputes began to escalate. For more, Bloomberg's William Close is in Johannesburg. William, give us the background to this dispute between Barrick and Mali. Where did it stem from?
Yeah, morning. So Mali has a really significant gold mining industry, and gold is their most important export. And it's important to understand that Mali has been putting pressure on all of the gold mining companies in the country. It's not just Barrick in the crosshairs. The finance and mines ministries in the country have been trying to get these companies to transfer large amounts of money to the state to settle financial claims against the companies, and also to accept higher tax rates and royalty rates in the future. So the other three main gold mining companies in Mali, active in Mali, have already come to settlements with the government. But Barrick, which is the world's second biggest gold producer and also the operator of the biggest mine in Mali, has not. It looked back in October like they might come to some kind of agreement, but those talks have soured. And the situation's got really bad now. They've put out an arrest warrant for the CEO, Marc. They've arrested and charged a couple of Barrick employees. They've restricted gold exports since, I think, November. And now they've started seizing gold kept at Barrick's mine in the country. So Barrick yesterday announced it had come to the decision to shut down, to suspend operations at its mine in Mali until it works out what to do about this problem.
Yeah. I mean, you really describe quite a hairy situation, especially with an arrest warrant being out for the CEO. Barrick stock is down 20%, which to me perhaps is a reflection of how important this mine is for Barrick. Just walk us through exactly how significant the mine is in terms of its contribution to Barrick's overall business.
Yeah, it's a really key asset, both for the Malian government and for Barrick Gold. For the Malian government, it's the biggest gold mine in their country. It contributes hundreds of millions of dollars to the state in taxes and royalties each year. And this is a cash-strapped government. That's total public expenditure each year is only a couple of $1 billion. So really significant for the government. Also really significant for Barrick. Barrick has a vast, sprawling portfolio of gold mines and copper mines around the world. And in recent times, Loulo-Gounkoto in Mali, which is what the mine is called, has been the second biggest contributor of both gold production and income after one of the company's flagship operations in Nevada in the US. So the stakes are really high for both parties, however long this suspension lasts and however it ends up being resolved.
Yeah, a really interesting story to watch and having a big impact on the Barrick stock. Thank you, Bloomberg's William Close in Johannesburg. Now for a look at some of the other stories we're following today. Kenya says it is in talks with the UAE to expand a railway line to Uganda and South Sudan. Following a meeting in Abu Dhabi, Kenyan President William Ruto said the two sides agreed to a feasibility study over the railway extension to foster regional integration and to promote trade. The East African nation is also seeking a $1.5 billion loan to help bridge its budget financing gap. And Bloomberg has learned that UK is willing to front-load the first 7 years of annual payments to Mauritius as part of a sweetened deal ceding sovereignty of the Chagos Islands. Under the revised deal, an initial lump sum would be paid to cover the annual lease for the Diego Garcia US-UK military base, as well as funds earmarked for development projects. And South Africa has closed a key border crossing with Botswana after heavy rains caused flooding. The country's border management authority says water levels have reached a point where it compromises the safe functioning of the crossing that traverses the Limpopo River. The route is crucial for copper mines in Zambia and the DRC, giving access to Durban Port in South Africa. Coming up, bumper bottom line for banks. The Wall Street majors kick off earnings season, and we're expecting to hear near record revenue. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Let's turn to Wall Street now, where banking majors are set to report fourth quarter earnings today. The biggest lenders likely made near record trading revenue thanks to volatility fueled by the U.S. election and geopolitical upheaval. Set to be their best final quarter in 5 years. Well, let that sink in. The majors are expected to see a bump of 15%. So for more, we're joined by Bloomberg's Harry Brumpton in Sydney. Wow, it certainly feels like expectations are high going into this earnings season, and we've got some of the biggest banks in the world reporting today. What are some of the factors contributing to this optimism around what we could get out of the banks today?
Yeah, that's right. Expectations are very high, and there's a lot kind of riding on this. Chiefly, as you said, we've got Citibank, Wells Fargo, JP Morgan, all coming up pretty soon. And there's analysts are very positive across the board for a number of reasons. Chiefly, there's a pro-growth agenda coming into play from deregulation and potential tax cuts related to the next Trump administration. Analysts as well across the street have been reading a lot into the potential rebound in capital markets continuing into 2025. There could be more share buybacks in the pipeline, according to some analysts, extra deal making in capital markets, and then just straight up revenue growth from continued GDP growth that hasn't quite slowed down yet. So there's a lot going into it, and the chief question is to whether those expectations have got ahead of themselves, I guess.
Yeah, and I guess the big question for investors is whether the strength in some of the investment banking business, the trading businesses, particularly on the equity side, can compensate for the slowdown in growth that we're probably going to get on net interest income.
Yeah, that's right. I mean, we did see a big inflation shock recently, and that may have played into some of the doubts around this. If there's continued high inflation, there's going to be less room to cut rates, and then that feeds through to bank margins and profitabilities. It's just a simple calculation for banking that you can change the rates on your book when rates increase, and that's slowing down. So there's that element, and then on top of that, if there's any volatility, I mean, we saw this in the prior Trump administration, just a lot of uncertainties and brinksmanship and geopolitical games going on. That volatility doesn't really help capital markets, and especially those, at least particular parts of the banking industry, and especially those deal-making parts, M&A and equity capital markets and big IPOs just aren't going to happen. So there might be a pickup in trading, and that's kind of the both sides that the big banks want to play. But it can kind of cut both ways, really. So they have said that they've seen there was really no slowdown or no seasonality in the last quarter because they saw a pickup in trading because people were hedging around the election and stuff like that. So that's a positive. But the downside is that once the administration comes in, a few surprises and you can really knock deal making pretty hard.
Yeah, I mean, the banks have had such a good run over the course of the last year, especially that bump post-election. So you've got to wonder whether the expectations, the bar is set really high for a beat looking ahead today. Well, thank you for setting the tone for us. Bloomberg's Harry Brumpton in Sydney. Now for a look at some of the other stories we're following. Bloomberg has been told a top BlackRock executive, once seen as a potential successor to the CEO Larry Fink, is leaving the firm. Marc is head of global client business and a 20-year veteran with the world's largest asset manager. We're told he's leaving to pursue other opportunities, with BlackRock set to elevate multiple executives as soon as this week in a leadership shuffle. And speaking of leadership shuffles, JP Morgan has named Jen Pipsag as its new chief operating officer, taking over from Daniel Pinto, who will retire next year. It is the second time in a year the biggest U.S. bank has shuffled its top management. Pipsag's spokesperson says she has no eyes on the CEO job for now, saying her preference is a senior operating role supporting top leadership. So lots of banking changes as we head into a big day for banks' earnings, with a lot of those majors reporting. Not just the banks, inflation data coming up too. Will it be hotter than expected? Will the markets react to that? Well, markets aren't doing a whole lot here. Futures trading sideways, leaning towards the green. Euro Stoxx futures leaning towards green as well, up 0.2%. But coming up in the next hour, we continue the conversation about the U.S. economy as investors await CPI data today, with Marc Franklin from Manulife Investment Management. I'm Jumana Versace in Dubai. Stay with us as Jennifer Zabazaja joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Modest gains for Asian stocks while the dollar steadies as traders await U.S. inflation data for Fed policy clues. Israel and Hamas reportedly agreed to a ceasefire deal in principle. CBS reports officials say a deal could be finalized as early as this week. And South Korean investigators arrest impeached President Yoon Suk-yeol for questioning over the martial law fiasco. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai for the second hour of Horizons.
Yeah, that's right. And I'm Jennifer Zabasaja in Johannesburg, where it's just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, a busy day for geopolitical news, also, of course, market news and eco news and bank earnings. A lot to pay attention to.
Yeah, there's a lot going on, Jennifer, as ever. We're going to talk about the big news out of the region with the potential of that ceasefire deal getting passed. But before that, as ever, let's start with markets. The focus for investors today is going to be on that inflation print, and namely because of all of the, hawkish tendencies the markets have had and witnessed over the last couple of weeks. The first 2 weeks of the year haven't been pretty for equities. We've seen a massive run up in bond yields. If we get a hotter than expected inflation print today, which is the market expectation, by the way, that we will get another uptick of the year-on-year rate, then perhaps we could continue to see these yields move higher. But today, into the event, not a lot of action. S&P futures trading sideways after a slightly better gain to the day yesterday. Asia Pacific handover also pretty flat, though leaning towards the green as well. 10-year yields hovering around 4.78%, so about 1.5 basis points higher on the session. And then Brent also up a tad, sitting at around $80. But of course, it's not just inflation watching out for, it is banks' earnings, as we were talking about. And we will give another preview about what to expect. But bottom line is, even though net interest income is going to disappoint or come in weaker, we will get a very strong quarter from an investment banking perspective. As for inflation, this is what the market's expecting. Headline CPI is expected to come in at 0.3% in December, month on month. That is unchanged from November, but on an annual basis, that figure rises to 2.9% from 2.7%. So that is what the expectation is. Core inflation is estimated to remain at 0.3% on a monthly basis. Now, turning to the region. Israel and Hamas have reportedly agreed in principle to a ceasefire deal that is according to CBS. The network says a deal could be finalized as early as this week. The proposed ceasefire would involve a 42-day truce, the release of hostages, and the establishment of a buffer zone in the Gaza Strip. Let's go to Jerusalem now and bring in Bloomberg's Dan Williams. Dan, good to have you with us. How do the contours of this agreement differ from that original proposal that the Biden administration put forward in May of last year?
Good morning. They don't differ significantly at all. What the difference is in the strategic environment, the military environment. Back then, Israel was facing a robust Iranian axis, including Hamas. In the interim, Israel has effectively put Hezbollah on the ropes in Lebanon. It's seen, largely as a result of that, the collapse of the old enemy Assad regime in Syria. It's also exchanged fire with Iran in a way that Israel says has effectively rid Iran, its arch enemy, of air defenses, potentially putting it wide open to an attack on its nuclear sites, and has continued fighting Hamas in the Gaza Strip, but also losing soldiers. And Hamas has, in recent days, been making an effort to resume cross-border fire. So the Israelis would say that while the deal is the same, Hamas now is open to it in a way it wasn't back in May, because it's lost its allies, it's lost many of its capabilities in the Gaza Strip, and it's looking to survive while it still can.
What is the likelihood that Netanyahu convinces the rest of his cabinet to agree to this deal? You've heard the likes of the finance minister, Ben Gvir, as well, even suggesting he may resign if the deal goes through. Could that bring down the government?
It threatens the government, indeed, but I don't think it's a big surprise. Those far-rightists, two ministers and their parties in the coalition, have long been disappointed with what they say is a less than fully formidable Israeli offensive in the Gaza Strip. They've also said that they want to see the Gaza Strip resettled by Israel. Effectively, the demolition, the defeat of Hamas, leading to Gaza being fully taken over by the Israelis and settled anew. Those settlements were withdrawn by Israel 20 years ago, you'll recall. So they've been at odds with Netanyahu on some really matters of ideological principle. It would not be a surprise if they were to chafe at this deal now, which they would see as a major capitulation, a catastrophe, one of them said. However, Netanyahu has bolstered himself in the coalition with the recent inclusion of a small centrist party. He's also been assured in Parliament that the opposition would support him when it comes to pushing through a deal like this, a deal that would entail the release, the recovery of around a third of the hostages being held in Gaza in the first stage. So it would not appear that he's immediately at threat. But the moment he'd be past that deal, he would be wide open and vulnerable, far more than he is now, to threats in Parliament or to any further intrigue within his coalition.
Yeah, definitely something to watch as we head into Jan 20th, which is the inauguration of President Trump. Bloomberg's Dan Williams in Jerusalem, thank you so much for the reporting. Well, key EU member states are said to want to suspend some sanctions on Syria to help ensure a peaceful transition of power following the fall of ex-President Bashar al-Assad. According to a document seen by Bloomberg, a group of countries believe an immediate review of sanctions would ease the flow of humanitarian aid and encourage the protection of women and ethnic minorities. The move would represent a major step towards reintegrating Syria into the international community.
And let's bring you a bit of breaking news that we are just getting into the Bloomberg terminal, and that is coming from the waning days of the Biden administration, saying that reportedly the U.S. is planning to push TSMC and Samsung to tighten the flow of chips to China. Now, this builds on some news that we got just a few days ago from the Biden administration, restricting global semiconductors from the likes of NVIDIA. Now we are seeing apparently there's going to be some new regulations that are to be announced. We're seeing some reaction from both Samsung and TSMC right now. TSMC down substantially, ticking lower. But we are waiting to hear from the Biden administration. What we are understanding is that the latest measures would seek to encourage chip producers like TSMC and Samsung and others to more carefully scrutinize customers and increase due diligence. And that's according to people familiar with the matter. And so we are going to await to see when that announcement may potentially come out. Our reporting suggests it could come out later today. But again, more regulations coming out from the Biden administration as they close out their administration. But we'll bring you more of that later today. Now let's turn to some other news we're following. Yoon Suk-yeol has become the first sitting South Korean president to be arrested after investigators launched a dramatic pre-dawn raid on his residence. In a taped address, the impeached president says he's agreed to be questioned over his short-lived martial law declaration to avoid bloodshed.
Today, when I saw them break into the security zone with firefighting equipment, I have decided to accept appearance at the Corruption Investigation Office for high-ranking officials in order to prevent an unsavory bloodshed, although it is an illegal investigation. However, I do not approve of this investigation by the CIO.
Let's bring in Bloomberg News Seoul Bureau Editor, that's Denny Thomas, who's joining us now. So, Denny, give us the state of play. What exactly is happening to Yoon from your understanding right now?
Hi, Jennifer. So right now, Yoon is in the custody of investigators who have 48 hours to grill him, and then if they require more time, they have to go to the court and get a new warrant. And as you mentioned, we are in uncharted territory in South Korea's politics. This is the first time that a sitting president has been taken into custody, and we have to see whether he gets released. We are expecting the investigating team to give us a briefing in shortly, so that will give us a sense of how long they plan to keep him in, or he gets released within 48 hours. That's where we are. And then parallelly, as you know, there is a impeachment trial that is underway, which started yesterday without Yoon appearing, and the second hearing of that court will happen tomorrow. So there is a series of things that is underway right now in Korea.
Denny, talk to us about the mood on the street. I remember just a few days ago when we were seeing some of those live pictures of people out on the street reacting to what was happening in the residence. What can you tell us about what things are like right now?
Yeah, so it was -8 degrees in Seoul, and people are still holding. And this kind of the mood has been pretty. It's been tense, but thankfully there was no kind of clashes. This morning we had more of Yoon supporters. They were outnumbered by the ones who wanted to get the president out of his office. They were at least for the past 3 weeks. They've been taking over the streets, running, which is leading up to the residence of the president, and there's been pretty. People were pretty intensely. Giving out their frustrations about a sitting president being taken out by investigating agency. They are pretty unhappy, but overall, a vast majority of South Koreans still want Yoon to be removed because they don't approve the way he imposed martial law last month. So that's despite the support that you've seen on street for him, the vast majority still wants Yoon to be out.
All right, we'll watch this closely. Bloomberg News Seoul Bureau Editor Denny Thomas joining us for the latest there. Denny, thanks so much for your time. Now, in the U.S., Donald Trump says he will create an external revenue service tasked with collecting tariffs on foreign imports. In a post on Truth Social, the U.S. president-elect says he'll set up the agency as soon as he takes office next week. Analysts and Democrats have pointed out that tariffs are already collected by the U.S. Customs and Border Protection. Now, still ahead, hear why Manulife Investment Management expects U.S. CPI to remain stubbornly above the Fed's 2% target. More on their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Traders are awaiting today's U.S. CPI report with a firm figure expected to bolster the case for the Fed to hold rates steady. Goldman Sachs' chief U.S. strategist told us exclusively that he expects a further inflation slowdown this year will help reduce bond yields. David Costin spoke to us at the bank's Global Macro Conference in Hong Kong.
The idea of a higher bond yield environment would be a headwind for really strong returns. Our expectation is that inflation is coming down slowly, and that bond yields will fall over the rest of this year, something closer to 4.25% on nominal yields, down from the current level, which is much higher than that. So I'd say that's a big area of focus for fund managers. One of the questions we spent a lot of time with yesterday on the first day of the conference.
Now joining us is Marc Franklin, MD and Senior Portfolio Manager for Asia at Manulife Investment Management, joining us now. Marc, great to have you on this CPI day. Let's just start with your expectations for later today and really what you'll be watching out for when it comes to this data print.
Yeah, good morning. We've seen in recent months the volatility of inflation has been coming down. But under the hood, there's been a rotation of components of the inflation index which have either surprised positively or negatively. So whilst positively speaking, shelter inflation has started to stabilise and normalise. We are seeing some tentative signs that categories such as travel and goods inflation is showing some upwards positive surprise potential. And that's one reason cyclically why we think that inflation will remain stubbornly above the Fed's 2% target on core PCE. And then just more theoretically longer term, the geopolitical dynamics that we see globally, whether that's deglobalization or the rerouting of supply chains, that's inherently inflationary. In addition to that as well, it is President Trump's intention, although we'll have to see what he can actually deliver, its intention is to deliver a relatively reflationary policy mix. So whilst there's a potential post the early part of this year for inflation to creep down a little bit, it looks like all other things being equal, it will remain stubbornly above the Fed's target.
Marc, what does that mean then for U.S. yields? We were just hearing from David Costin on his expectations. What then does the path ahead look like?
We'd focus very much on yield curve dynamics. We think the front end is reasonably well anchored now. Inflation expectations and rate cut expectations have been well and truly reset. So the market is now pricing in one rate cut this year and perhaps one rate cut next year, which is more hawkish than the Fed's dot plot. That represents a reasonable risk reward to be somewhat more constructive on the front end of bond curves now. But we still anticipate some further steepening to come, higher and rising term premium as a result of a fairly reflationary policy mix in the US, but also concerns in markets around fiscal sustainability beyond the US as well. If you look at the Eurozone, concerns over government debt levels, excessive spending, and more broadly as well, this dynamic around geopolitical disentanglement, which is more inflationary than disinflationary.
So then do we not see a peak coming until a bit of certainty pans out a bit more in both the US and the UK when it comes to yields, Treasury yields?
The most important catalyst in the short term is the early days of the second Trump presidency, post-inauguration. We understand that he'll want to hit the ground running. There'll be a flurry of activity in terms of bills and legislative agenda. That information will be very important for the bond market to digest because it will cover not only trade policy, fiscal policy, but also industrial policy as well. So if the interpretation is that the agenda, the ambitions have been brought in a little bit, then bonds may actually see a bid in the very short term. But if indeed, as our suspicion is, that the policy mix will be very ambitious, somewhat reflationary, you could see in the short term a further steepening of the yield curve and rising yields at the long end.
Do we need to see yields start to come down, Marc, in order for equities to go up? Or is it a different picture that we're in right now in 2025?
What we'd say is that a steep yield curve is somewhat constructive for certain parts of the economy, particularly financial. So they are enjoying what is happening right now. And then it comes down to whether you get a bear steepening or a bull steepening. So a bear steepening is where bonds across the curve are being sold off. That is generally going to serve as a headwind for equity market valuations and capital market assumptions there. Whereas if it's a bull steepening where you're starting to see the Fed talk up the possibility of further rate cuts being possible over the next 12 to 18 months, the market's assessment will be that will be somewhat stimulatory and supportive for medium to longer term growth expectations. And so earnings growth expectations will remain somewhat buoyant, which will be helpful for equity markets. So the devil is really in the detail in terms of how the bond curve reacts to the early policy pronouncements that we'll see.
And then, Marc, just branching out outside of the U.S., I mean, how does that play out for, we talk a lot about EMs. I mean, a lot of activity really is contingent on what we are seeing from U.S. data points. How are you expecting that to play out?
Indeed, we saw in the second half of last year a number of central banks in emerging markets begin to cut rates because they got real yields into healthy positive territory. So whether it was the Brazilian central bank, the Indonesian central bank, a number of emerging market central banks with policy flexibility began to cut. But in recent weeks, we've seen a resurgence of the dollar, a somewhat more hawkish tone to bond trading in the US. And because of US dollar strength and effectively the exporting of monetary tightness into emerging market economies, that will likely mean that central banks in Asia in particular may be required to pause in terms of further rate cuts. And indeed, some central banks, and we've we've seen this with Brazil already, may have to resume increases in order to stabilise capital flows and to quell FX volatility. So, yes, there's a great deal of sensitivity in the short term to US dollar and rate dynamics, but the growth outlook for the emerging market complex for 2025 is broadly decent. The one swing factor, of course, will be China and the extent to which we can see a cyclical pickup this year after a more challenged 2024.
Right, certainly what the authorities want to see. Marc Franklin, MD and Senior Portfolio Manager for Asia at Manulife Investment Management. Marc, thanks so much for your insights and for joining us this morning. Now, coming up, it's set to be 10 times the size of the world's biggest existing solar battery project. More details on the Emirates' green energy plans in the desert. That's next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. The UAE has become the first Gulf state to declare a target of reaching net zero carbon emissions by 2050. Now, to hit that goal, it is planning a $6 billion solar and battery project to provide uninterrupted power supply. Abu Dhabi's state-controlled Muscat is building the solar capacity. Now, I spoke to the CEO as well as other key voices about clean energy goals on a panel at Abu Dhabi Sustainability Week.
We are producing 25% electricity from Baraka, from the nuclear power plants. We have the largest installed capacity of renewable energy in the region, and we have the largest solar plants in the UAE here. So when it comes to decarbonization, UAE has been serious and continues to pursue the meeting of the net zero target. And if I may pivot onto nuclear specifically, I think we managed to do this program to the highest standards of nuclear safety, security, and non-proliferation. We managed to do it on time and on budget. I think it's a great testimony of the success of this nation. We have the capacity from a human capital point of view, from policy, strategies, and vision to make such projects happen in a great success. And I'm looking forward to this energy demand. I would like to meet this demand challenge by providing more of a base load green electrons, and that is very sought after. And my colleague Catherine mentioned, these are very valuable electrons that all industries and everybody in the world want to put their hands on.
Yeah, fascinating. Catherine, I want to pivot a little bit towards the technology advancements. We sort of touched on it, but where do you see the biggest progress being made from a technology perspective in terms of energy storage, carbon capture, grid modernization? Where are the biggest strides being taken?
Well, maybe to stay with the theme of green electrons that are becoming more and more baseload, I think on the storage, this is where we are getting the most advanced and the most rapid progress. If you look at the cost of storage and the battery technology, the duration of storage is changing by the week. And that's really very, very hopeful, because you have to look at the cost of the system and the solar and batteries. The solar, prices have decreased so much for the past 20 years. So if you project what's happening in the battery space and you project similar kind of cost reduction curves, you can only be excited about what that potential can be.
Well, that was Mohammed Al-Hamadi, His Excellency Mohammed Al-Hamadi from Emirates Nuclear Energy Company, Mohammed Jamil Al-Ramahi of Muscat, and Angie's Catherine McGregor. Coming up, we're going to talk about a major rescueway in South Africa.
This is Horizons Middle East and Africa, our top stories this morning. Modest gains for Asian stocks while the dollar steadies as traders await U.S. inflation data for Fed policy clues. Israel and Hamas reportedly agreed to a ceasefire deal in principle. CBS says a deal could be finalized as early as this week. And South Korean investigators arrest impeached President Yoon Suk-yeol for questioning over the martial law fiasco. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Yeah, that's right, Jumana. And it is a busy day, as we were mentioning, for the markets. Also, geopolitically, we're paying close attention to what is happening with that ceasefire deal. And, of course, the CPI print. All eyes are on that for traders. But let's take a look at where markets are positioned ahead of the trading day. Right now, we can see U.S. equity futures not doing all that much, but NASDAQ futures ticking marginally higher. But, of course, that comes after we saw Tuesday tech, again, dragging down the index with it closing in the red for a third day. But right now, looking like potentially a positive start for the index. Not the same story, though, for when it comes to emerging market stocks. Backing off of some of the gains that we did see on Tuesday. Some of those gains did follow the PPI print that we got in the U.S. And also that report we were talking about potentially gradual Trump tariffs. We saw the MSCI EM index closing in the green for the first day in 5. But right now, we are seeing a bit of action when it comes to what is unfolding in South Korea with the president sending Korean stocks marginally higher, but not enough to lift sentiment there because we're seeing China, of course, having an effect there. U.S. Treasuries also slipping in early trading right now. We're seeing the 10-year note just about 4.78%. And all eyes again on that potential ceasefire that we'll get. We're seeing Brent right now just above $80 a barrel. But of course, the main act for today is U.S. CPI. And as this terminal chart shows, economists are predicting an acceleration in the headline year-on-year print, expecting it to rise to 2.9% from 2.7%. We are potentially going to see a fifth month of increases, though, as we've been talking about to investors all morning. What that could mean for the path ahead is really the focus for investors. But all eyes will be on that print coming later today. Now, let's pivot back to the African region here. There's a major operation that's underway in South Africa's northwest province to rescue illegal gold miners stranded deep in underground shafts. The operation comes months after authorities attempted to force the miners to resurface by sealing off the shafts. Some estimates say around 1,000 people remain trapped, but South Africa's police minister is unsure of the exact number.
Today, we shifted our attention to the figure or estimate or guesswork of people that are underground. The fact of the matter is that there is no one person who has gone underground and made people line up and count them from number one up to the whatever last figure. So we don't know the figure.
For more, let's bring in Bloomberg's Stembile Sele, who is joining us now here in Johannesburg. She's been following this story very closely. Stembile, great to get you on. So many of us here in the country have been following this story closely. But for the global audience, talk to us about how this standoff actually began. Take us back a bit.
So this rescue operation that began on Monday is really the culmination of a standoff that's lasted about 4 months since October, where security forces embarked on this operation Vala Mkoti, which basically means to close the hole. It's a clampdown on illegal mining, which cost the economy around 60 billion rand last year. That's $3 billion. And so the intention really was to seal off these shafts and to prohibit any kind of provision from going down to people that are underground. That's food, that's medicine. And then also they rely on people underground to rope them in and out. And so the intention was to get these people to force themselves to come out, given the lack of provision. And it worked for 2 of the 3 of the shafts on the mine, but one in particular is problematic because there is no infrastructure to come back up. And so this is where we've seen the majority of this tragedy unfold. The pit is 2.8 kilometers deep, and so without any assistance to bring you back up to the surface, people have been trapped there. Many have starved to death, others have fallen to their death trying to come up the rope, which is a pulley system, a makeshift one, which some of the community members took it upon themselves to try and rescue these illegal gold miners.
And Stembile, you were out in the field yesterday, I believe, so you know this story very up close and personal. Where do things go from here? How does the government handle this? How do authorities handle this? And what does this mean for people who are trying to make a living at the end of the day?
It's a really tricky one. There's a lot of moving parts because the first element, as you mentioned, is that of poverty and unemployment, which has driven the majority of locals to go into this illegal gold mining trade. There's also massive criminal syndicates that are at play. We've seen children as young as 14 years old resurfacing from these mines, and so that that suggesting elements of human trafficking as well. So there's crime that the security forces are trying to deal with, but this has become a really delicate situation with the tragedy unfolding. The police minister, though, and the mines minister, they're adamant that they've done the right thing. This is an illegal activity. It's an attack on the economy is what they're calling it, and they're going to continue with efforts to clamp down on illegal mining.
Wow. It's a very tragic story, as you were mentioning, on many fronts. Appreciate your reporting, as always. That's Bloomberg's Dembele Stele here joining us in Johannesburg. Now, for a look at some of the other stories we are following from the region. Kenya says it's in talks with the UAE to expand a railway line to Uganda and South Sudan following a meeting in Abu Dhabi. Kenyan President William Ruto said the two sides agreed to a feasibility study over the railway extension to foster regional integration and promote trade. The East African nation is also seeking a $1.5 billion loan to help bridge its budget financing gap. Bloomberg has learned that the UK is willing to front-load the first 7 years of annual payments to Mauritius as part of a sweetened deal to ceding sovereignty of the Chagos Islands. Under the revised deal, an initial lump sum would be paid to cover the annual lease for the Diego Garcia US-UK military base, as well as funds earmarked for development projects. And South Africa has closed a key border crossing with Botswana after heavy rains caused flooding. The country's border management authority says water levels have reached a point where it compromises the safe functioning of the crossing that traverses the Limpopo River. The route is crucial for copper mines in Zambia and the DRC, giving access to Durban Port in South Africa.
And the European Union's top diplomat, Kaja Kallas, has commented on the possibility of an imminent ceasefire deal between Israel and Hamas. Speaking to Bloomberg's Oliver Crook, Kallas also discussed the regime change in Syria.
Well, we have been in close contact with the actors there, and of course we have been waiting for the ceasefire for quite some time already. So hopefully we have some good news now. Of course it needs to have the release of hostages. I just met today with the relatives of the hostages, and these stories are horrible. So this is definitely one element of the deal, but then we need to work what comes after, and there's a lot of that Europe can also do in order to secure this region.
And there's also a question of what comes after in Syria. I know you're just back from a trip from the Middle East. Were you encouraged about what you're hearing in Syria? Are we going to get sanctions rolled back, do you think? Are you optimistic about that?
Well, they say all the right things. I mean, I also met the Syrian foreign minister and expressed the concerns that Europe has regarding, inclusivity of the Syrian society, because it's a very diverse society, has many different groups. So how they plan to do this. So I see that there's a lot of goodwill. The words are right, but we need to see the deeds as well going to the right direction. And there, what we will discuss in the 27th of January is the roadmap, how we can, relieve the sanctions, starting from those which are needed and necessary to build up the country, and then, have conditionalities for the next steps when we need to see that the steps are going to the right direction.
That was EU High Representative for Foreign Affairs and Security Policy, Kaja Kallas. Now, the SEC is suing Elon Musk for allegedly waiting to disclose his acquisition of Twitter shares in order to build his position at lower prices. For more, let's bring in News Desk editor Jill Desis. Well, another day that Elon Musk is in the news. He always seems to be in the news or in our show. But just walk us through what the SEC is alleging that Elon Musk did.
Sure, Jumana. So this is actually a case that stretches back a few years, back to when he actually sort of publicly disclosed that he had taken a bigger stake in Twitter. That obviously ultimately opened him the door for Musk to then buy Twitter, rename it X. Now, this leads us to here we are today. So what the SEC is accusing Musk of is saying that he expanded that stake, moving over that 5% threshold without really telling anyone. And so they're actually accusing him very seriously of cheating out, the Republican investors in the company at the time out of money by doing this, saying that he actually cheated Twitter shareholders out of some $150 million because of this lack of disclosing this. So what the SEC has done, it seems, is actually tried to fine Musk a penalty of somewhere in the neighborhood of $200 million, in addition to his lawyer just calling this entire thing a sham, really pushing back quite aggressively against the SEC. What Musk's attorneys are also saying is that type of penalty for this situation is just way too high. They're arguing that similar cases kind of came to the tune of around $100,000 or so. So really, I think here you're just seeing, again, right before the Trump administration takes over, this Musk SEC battle, which I think frequent followers of Musk know this isn't really his first tussle with the agency here.
Yeah. Well, I was going to say, right, it's not his first tussle with the agency, and you're referring to what happened in 2018 when obviously, well, back then, for those who don't remember, Elon Musk put up a tweet suggesting that he'd secured the funding to take Tesla private. Anyway, it turns out that never transpired, and then there was a whole tussle, as you say, with the SEC. Did that come up this time around? Was there any reference to prior civil litigations?
I mean, I think that all of this is sort of like, inferenced, right? I mean, I think at this point, the SEC was certainly wanted to be a lot more focused on this whole Twitter X argument here. But obviously that stands very heavily in the minds of anyone, including obviously Elon Musk, who sort of had this battle here. I mean, actually, one thing you can kind of point to is that last month we kind of got an inkling from Elon Musk that he knew that the SEC was sort of digging into, some of these Twitter activities. He kind of, said as much. And so, it's obviously front of mind for him. But again, we're about to see a pretty significant administration changeover once President-elect Donald Trump takes office next week. And as we have very well seen over the course of this campaign cycle, Elon Musk has really tied himself to Trump, heavily supported his campaign, and actually does have, in some ways, a role in the new administration, just as this informal advisor, but also kind of running up a Department of Government Efficiency. So we'll actually have to, see over the next week how exactly all of that changes just with that big transition of power.
Yeah. News Desk editor Jill Deses, thank you so much for bringing us the latest reporting on none other than Elon Musk. All right, coming up, French Prime Minister Bayrou offers to renegotiate the 2023 pension reform to gain lawmakers' support and urgently adopt a budget. We're live in Paris next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersacci in Dubai. French Prime Minister François Bayrou has reopened the controversial French pension reform adopted in 2023 to get the support of center-left lawmakers. The move is also to avoid a vote of no confidence that toppled the government of his predecessor, Michel Barnier, in early December. Bayrou also pledged to reconcile the French and reform the voting system to include some proportional system during a general policy speech to the National Assembly in Paris. So for more, Bloomberg's Caroline Conan joins me from Paris. Caroline, it really feels like this is his first big test in front of Parliament, and the stakes are high, given what happened to his predecessor. But is it really a budget discussion if there's no talk about the French pension reform? It's an ongoing topic in France. Always is.
Oh, for sure. It's an ongoing topic for the past 30 years, maybe, and he's clearly reopened the Pandora box. Remember this very controversial pension reform back in 2023 that passed after months of protests in the streets, and that was raising the retirement age in France from 62 to 64. So clearly, why would he do that? Well, the parliament is still fragmented in 3 blocks, and that was seen as the only way to get the support from the socialists in the center-left. Have a listen.
La loi de 2023 The 2023 pension reform law is expected to first push the legal age of retirement to 63 by the end of 2026. Therefore, a window of opportunity has opened. I would like to set a shorter-term deadline by the fall when the next Social Security financing law will be discussed. We can seek a new path of reform without any totem and without any taboo.
As you heard, he did not pronounce the word suspension, but he did say there was no taboo anymore, including on the actual retirement age. He said, however, every other alternative will have to be financed because abandoning this pension reform will cost about 15 billion euros a year to the budget over the next few years. And we have a budget, of course, that needs to be adopted very soon by mid-February with a growth target that he also lowered for 2025 to 0.9% of GDP.
What are other lawmakers saying, Caro? Is what he's offering enough to convince people to actually go ahead and vote for this budget, or is he going to face more problems?
In the short term, he's just buying time, so he's probably going to make it through this week. Whether he makes it through the budget next month is a different question. With this reopening discussions on the pension reform, he should get the support from the socialists, even though, again, the head of the Socialist Party, Olivier Faure, was saying last time he wants more guarantees that this pension reform will actually come back to debate in Parliament, not only within the government and within the unions' discussions. He should also get the abstention from the National Rally, at least this week. They have said that they don't want to create more chaos in the short term. He's just buying more time. The Parliament remains fragmented. Emmanuel Macron, the president, cannot call new snap elections until at least July. So the pension reform has only opened a very, very narrow path for François Bayrou to survive perhaps a few months. In fact, he used a sense of humor in his speech yesterday, quoting this poll, saying that 84% of the French actually think he won't survive the year. He said, I actually wonder where the remaining 16% find their optimism.
Wow. Well, to recap what you said, one thing that stood out to me, he will survive this week. And what is important is what you didn't say. So lots of questions about the future of this newish French Prime Minister. Bloomberg's Caroline Conan in Paris. Thank you so much. Well, over to Japan now. Earlier on, we were talking about some of the commentary from the Bank of Japan Governor Ueda, hinting that they may be looking to hike interest rates at the meeting next week. And so you're seeing quite a big reaction here. Yen has rallied 0.4% versus USD. So we're trading at around a 157 handle. Remember, we're getting closer and closer to 160. But then two-year yields also making new highs, highest since 2008. As you can see from there, we've broken through 0.7%. So this is the highest level for two-year yields since 2008, on building expectations that the Bank of Japan may continue with their hiking cycle next week. And coming up, bumper bottom line for banks. The Wall Street majors kick off earnings season, expecting near record revenue. The details next. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's turn to Wall Street now, where banking majors are set to report fourth quarter earnings today. The biggest lenders likely made near record trading revenue thanks to volatility fueled by the U.S. election and, of course, geopolitical upheaval. Set to be their best final quarter in 5 years, the majors are expected to see a bump of 15%. For more, we're joined by Bloomberg's Charlie Wells, who is in London for us. Charlie, great to get you on the show. So talk to us about how close to perfection we're expected to see some of these big bank stocks and how they're priced just ahead of earnings season.
Yeah, Jen, that really is the key question going into this huge day for these large American banks. Investors know that major banks had a really great 2024. There were all of these expectations about a rate cut. That rate cut eventually came, which helped prompt an M&A boom. It helped prompt a lot of the deal making that investors had been hoping for a long time. Then we moved into that election season with a lot of volatility. It's looking like some of these banks' trading desks may have some record record quarters. And then, of course, after the election victory of Donald Trump in November, we got this high expectation of what deregulation could mean for the sector. Now, I've said the word expectation a lot already, and that gets to your point about potential price to perfection here for some of these shares. If there is bad news, if those expectations aren't met, that could put some of these big bank stocks under pressure today.
Yeah, and we've been talking quite a bit about how some of these employees at the banks are going to be getting record bonuses as well. Talk to us about what we're going to expect later today from some of the majors that are starting us off.
Right, so we've got three big ones coming today and then a number tomorrow. But today we've got JP Morgan, the U.S.'s largest bank. And so we're expecting, at least according to analyst estimates, to see investment banking revenue there up 45% from the same period last year. Equities trading up about 30% according to some estimates. And of course, potentially some comments on succession. We heard about a new COO yesterday, which always begs the question, what happens with Jamie Dimon in the future? We've got Citigroup as well. That's going to be interesting, sort of a turnaround story there. CFO Marc Mason has been talking about, equity markets businesses there potentially up in the high teens. We've heard about the potential for maybe some buybacks if they get more clarity on capital. And then, of course, today also we've got Goldman Sachs. That has been a more slimmed down, more focused bank recently. And I think one question that a lot of investors are going to have on that front is, what does their wealth management business look like? And does the appetite for big deals that they've been working on, does that continue going forward?
And Charlie, really quickly, what about the guidance for 2025? What are you paying attention to?
Yeah, Jen, you hit the nail on the head there. So today, really, of course, we're going to be looking back at the fourth quarter, but what analysts and investors are going to be razor focused on is that guidance for the year ahead. And of course, it's going to be a very different year ahead from the one prior. We've got Donald Trump coming into office in just a few days. And I think the question here really is, what does deregulation look like? Do some of these capital requirements stay low, for instance? What do buybacks look like going forward? And also, does the volatility that benefited a lot of these trading desks, does that continue, and does that continue to make money for these banks?
All right. We know you'll be on top of that and appreciate you joining us nice and early. Bloomberg's Charlie Wells in London for us. Charlie, thanks so much. Always great to speak with you. Let's just take a quick check at where markets are positioned. We mentioned it is CPI day, so seeing traders potentially sitting on the sidelines and waiting for that S&P futures, not doing all that much, but we are seeing a bit of green after a bit of a choppy session that we did see on Tuesday. We'll wait to see what we get from that print. Now, that is Horizons Middle East and Africa on this Wednesday morning. I'm Jennifer Zabasaja in Johannesburg with Jumana Bersachi in Dubai. Stick with us for Daybreak Europe. This is Bloomberg.